You just got done paying for a big job out of your own pocket, and now you're staring at your business bank account, wondering if you can just quickly transfer some cash over to cover your personal electric bill before it shuts off tomorrow. It seems harmless because it's all your money anyway, right? But making that transfer just flipped a switch, and we're going to walk through exactly what happens hour by hour, step by step, when you mix your personal life with your business bank account. Let's simulate the exact timeline of what happens when you pay personal bills from your business account. We'll start at month 1. You run a small operation, maybe you're a contractor, a mechanic, or you run a cleaning business. You set up a limited liability company, usually called an LLC. An LLC is basically a legal wall that separates your personal assets, like your house and your savings, from your business debts. If your business gets sued or goes under, that wall is supposed to protect your personal bank account. But right now, it's a slow week. You're sitting at your kitchen table at midnight and you realize you forgot to pay your personal water bill. You don't feel like logging into your personal bank account, waiting 3 days for a transfer, and dealing with the late fee. You just look at the balance in your business checking account, see there's plenty of cash in there from a recent job, and you just pay the water bill straight out of the business funds. You tell yourself you'll pay it back to the business eventually. You click submit, and you go to sleep thinking you just saved yourself a headache. Here's what actually happened in that exact second. The law has a concept called commingling of funds. Commingling just means mixing things together. When you pay a personal bill from a business account, you just mixed your personal life with your business life. You took a sledgehammer to that legal wall we just talked about. The law views your LLC as a totally separate person from you. When you reach into the LLC's wallet to pay your personal water bill, you basically stole from your own company, or at least, that's how the paperwork looks. Fast forward to month 4. You've been doing this occasionally. You buy groceries with the business debit card. You pay your personal car insurance from the business checking. You even paid for a family dinner out using business funds. It feels totally fine because you're the only owner and you figure you own the money, so it shouldn't matter. But right now, the clock is already ticking on a bomb, and you can't even hear it yet. Let's jump to month 8. This is where the simulation gets very real. A customer decides to sue your business. Maybe a job went bad, or maybe someone slipped on a property you were working on. They hire a lawyer, and that lawyer's first move is to look for a way to get to your personal savings. They want to bypass that legal wall entirely. This process is called piercing the corporate veil. Piercing the veil just means a judge looks at your business, decides it isn't actually a real separate entity, and wipes away your liability protection entirely. The lawyer asks a judge to order an audit of your business bank accounts. The judge agrees, and suddenly, every single transaction you've made in the last year is being reviewed by a stranger with a magnifying glass. They see that water bill payment from month 1. They see the groceries. They see the car insurance. They print all of this out, and they hand it to the judge. They tell the judge that your business isn't a real business. They say it's just your personal piggy bank, and therefore, you should be personally responsible for the lawsuit. If the judge agrees, your personal house, your personal savings account, and everything you own is suddenly on the table to pay off this business lawsuit. That one midnight water bill payment just cost you the shirt off your back, all because you wanted to save 3 minutes and a late fee. Instead, we jump to month 10, and your business has a slow winter. You can't make the lease payment on your equipment, and you've to close the doors. You think you're safe because you had an LLC, so you just walk away from the business debt. But the bank holding the business loan doesn't just shrug and walk away. They look at your past bank statements. They see those personal payments. They sue you personally to pay back the business loan using those exact same commingling arguments. They argue that you treated the business as your personal wallet, so you should personally pay the business debts. You lose the LLC protection, and you're stuck paying off a business loan out of your own pocket for years to come. Finally, we jump to month 12. It's tax season, and you owe the government money. You're sitting with your accountant, and you hand over your business bank statements. The accountant looks at the grocery store purchases, the car insurance, and the water bill, and they immediately tell you that these aren't valid business deductions. A deduction is an expense that lowers your taxable income, so you pay less tax. Because you paid personal stuff from the business, the government views those payments as something called an owner's draw. An owner's draw just means you took money out of the company for your own personal use, which doesn't lower your taxes at all. But it gets worse. If you accidentally claim those personal bills as business expenses to try and lower your taxes, you've just committed tax fraud. You didn't mean to, but that's exactly what happened. The accountant has to untangle the mess, which costs you way more in accounting fees, and you end up paying a massive tax bill because the money you took out of the business is completely taxable to you personally. This entire nightmare happens because of a few lazy clicks at midnight. You've to understand that the law only protects you if you treat the LLC with total respect. You can't pay personal bills from business funds. There are no exceptions for small amounts, and there are no exceptions for solo owners. If you need money from your business to pay your personal bills, there's a very specific way you've to do it. You've to formally pay yourself from the business. You can write yourself a check from the business account to your personal account, or you can do a direct transfer from the business account to your personal account. The key is that the transfer has to be clearly documented as an owner's draw or a distribution, which is just a fancy word for a payout of the company profits to the owner. Once that money lands safely in your personal bank account, you can use it to pay your water bill, your groceries, or whatever else you need. The business paid you, and then you paid the bill. That keeps the legal wall intact and keeps your personal assets protected. If you've already made this mistake, don't panic. You need to talk to a licensed, certified public accountant in your state right away. They can help you reclassify those transactions before tax time rolls around and before anyone sues you. But remember, every state has different rules for business entities. Some states are extremely strict about commingling, while others give you a little more leeway, but the general principle of keeping things separate applies almost everywhere. You'll want to get specific advice for your exact situation, because this education is meant to show you how the rules generally work, not to tell you exactly what to do with your specific paperwork. You should also know that this doesn't just apply to bills. If you use the business debit card to pull cash out of the ATM for your own pocket, that counts too. If you deposit a check from a customer into your personal bank account instead of the business account, that's also commingling. Anytime personal and business money crosses paths outside of a formal paycheck or distribution, you're risking your entire financial safety net. It might seem like a giant hassle to manage two different bank accounts and constantly transfer money back and forth, but that hassle is the entire price of having liability protection. If you're not willing to do the paperwork, you might as well not have an LLC at all, because the courts will just treat your business as a fake shell if you don't respect the boundaries. What's the strangest personal expense you've ever seen someone try to run through a business account? Let me know down in the comments. If this breakdown helped you see why mixing your money is like playing with fire, please pass the video along to a buddy who's always cutting corners with their side hustle. And make sure to subscribe to Scribble Law so you always know the exact rules before someone tries to use your own bank statements against you.